Well, good afternoon, everyone. Thank you for joining the MetroHartford Alliance on our second webinar on what none of us anticipated, but all of us are reacting to. Today, we're bringing together a few experts to help us understand the SBA disaster loan program. And we are using this as a preview or a primer, let's say, for a second conference that webinar that we're going to host on Tuesday, where we'll have the SBA and some folks associated with the SBA actually walk through the form. Today is intended to help us all think about the documents that we're going to need in order to successfully apply for the SBA loan program. That said, a few things for you to think about, instructions on how you can participate. If you move your mouse, and you'll see on the bottom of your screen that there is an opportunity to chat. If you have a question, press that chat button, type in your question, and at the end of the content, we'll begin to try to address however we can those questions. The webinar is being recorded, and you will have access to the webinar on a new website that the MetroHartford Alliance has created called preparedhartford.com. You can also access that new website off of our main website, MetroHartford.com. We created a separate website so that we could begin hosting all of our webinars and begin to assemble all of the different data and tools that are being made available to our business community as we react to the coronavirus situation. Just as a disclaimer, we are attempting to provide good information to you, our members, and our community at large, but we also encourage you to enlist the help of paid professionals. We're trying to help begin to get you thinking about how to address the SBA and successfully navigate the loan program, but there's nothing better than a paid professional to help walk you through it as well. Again, a quick timeline. Monday, just this last Monday, which now seems like a year ago, we hosted a panel discussion with the CBIA, the SBA, and the Hartford Foundation for Public Giving. Today, Friday, we are beginning to look at the disaster loan recovery program and more in depth. Tuesday, we will have, again, the panel with the SBA, SBDC, and potentially somebody on the labor side, though we may forego that given the information we received today and the response today. And in the future, we will continue to provide webinars and access to the data and information that we're hearing from our business community that they need in order to navigate through the times that are ahead of us. That said, Jevin Gibb, Director of Research and Economic Development for the MetroHartford Alliance, will walk us through a lot of the learnings that he's had. We've tasked him with understanding as best he can some of these programs. George Thompson, President and CEO of TAG. And then we also have online Matthew Puglisi with the Connecticut SBDC Small Business Development Center to be online with us in case we have specific questions that he would be able to address. That said, I will hand it over to Jevin to walk through the beginning.
Well, good afternoon. Thank you, everybody, for joining us. You know, our big goal today, there's been several webinars where different chambers or the SBA itself has covered the economic injury disaster loans. We understand that there's a lot of information out there already. What we'd like to do is kind of increase the accessibility of the program, increase people's success in applying for these loans by sharing best practices and getting the best information out there possible to get people comfortable with it and to get successful applications put in. Today, we're going to cover, how to think about whether to apply, the timeline for applying, how the application works, and how to continue engaging with the SBA resources in the future. To do this, we're going to very quickly go through what the program is and how it works. Realizing that many of you already have the overview, we'll also give links for people who need a little more in-depth information to go and do that research themselves, but also reach out to us if you need that information. We'll go over practical insights for business. Again, this is about increasing your success of applying for these loans. We'll go through how to gather the requirements. One of the biggest burdens here is getting the information necessary to get approved for the right amount of loans to continue the success of your business. From there, next steps, how to think about going forward into the future. And then finally, at the end, we'll open it up for Q&A. Again, for those of you who might have questions, feel free to post them throughout the webinar. If you go into the chat, type them in. We've got staff who will keep track of it and ask us when everybody's done. So let's start with what it is and how it works. The economic injury disaster loan is the SBA's attempt to keep small and medium-sized businesses solvent by covering their necessary expenses during the COVID-19 crisis. High level, it covers up to $2 million. This is in expenses, not improvements. If you want to, do new fixed improvements to your store, that's not what this is going to cover. This is about making sure that you have the cash necessary to cover your expenses while we deal with decreased revenue or increased costs. The interest rate is 3.75% for for-profits, 2.75% for nonprofits. That's flat for either of those categories. It doesn't shift depending upon your credit rating. The business must be impacted by COVID-19. When we first started talking about this, there was a lot of talk about maybe you would and maybe you wouldn't be impacted. By now, just about everybody's impacted. It's a 20 to 30-year repayment rate. The SBA, this is a pretty paternalistic process where you give the SBA information and they decide what's best for you. The repayment term is similar there. They will try to make the term long enough such that your monthly payments are within your capacity to pay. It's dependent upon credit rating and good standing in debt repayment. We'll hit on that a little more later. The SBA will propose the amount and term. This is not the borrower's election. This throws a lot of people off. They expect to go in and say, I need $100,000. Instead, you need to provide the right documentation so that the SBA will award you the correct amount, and we'll go into that a little more later. There's no penalty for early repayment. This is not for businesses with existing access to credit. We'll go over that a little more later. But if you have access to other lines of credit, you are less likely to be approved for this program. The disbursement amount can be increased or decreased based upon what happens in the future, which nobody is really sure what happens next. Collateral is required for loans over $25,000, but loans under $25,000 will not be declined for lack of collateral. The SBA says they will be more flexible than usual. The goal here, or the message here, is err on the side of applying. Do not, go into cash flow problems. Do not go into bankruptcy because you hesitated to apply. Apply, get in the program, get the help you need. And expect at least around 1 month between application and closing, at least. So again, don't wait until you're 1 month from running out of cash, or don't wait until you're 1 week before running out of cash. You need to get ahead of this to make sure that you're in a very healthy cash position. We'll go over that a little more later. Who is not eligible, and I'll provide a link for people who might want to get more into details on this later. Nonprofits that are not privately owned, so the government doesn't want to just push money between different entities. There are many state-owned nonprofits. agriculture, religious organizations, charity organizations, gambling concerns, casinos, and racetracks. If you have questions, contact me or go to the SBA website and we'll get you more information. There's going to be 5 required documents that you fill out. We'll walk you through each of those documents. The big lesson here is the application will take a considerable amount of time and effort to complete. You know, those 5 documents, you have, you know, Form 5, which is basic information. For that, you'll need federal employee ID, so that's your EIN. You'll need the social security number and date of birth for every owner over 20%. That's for all of these forms. If you have several owners that are over 20%, you will need information for each of them. You'll need an SBA Form 1436. That's monthly sales figures going back 3 years. One of the reasons that we have George here, and it will be awesome to get his perspective, is talking about how to gather that information, especially if you're a business that hasn't been actively tracking them. You have an option to provide a financial forecast given COVID-19. That one's going to be critical. We'll talk more about that in a bit. There's an SBA Form 413D. That's a personal financial statement. It's similar to a balance sheet, but it's not about the business's finances. It's about your personal finances. This one's going to be intensive to complete, and you need it for every owner over 20%. Fourth is a schedule of liabilities. This is where you need to organize all your credit card, loan, and other expenses. When you give this and your optional financial forecast, that's going to help the SBA determine how much you need. It's important to get these 2 documents right and to go into as much detail as possible. And finally, you have your tax release form, and that's going to be for each owner over 20%. I see questions coming in. I promise you we'll get to you. Additional documents. You've got a complete copy of your most recent tax return for all owners over 20%. That's even though you already provided that IRS tax release form. If your most recent taxes are not filed, a year-end P&L and balance sheet, and a current year-to-date P&L. So you're giving it for last tax year, give it for the 3 months that we have now. These documents are optional, but if you have them, make sure to increase your success. So if you give the SBA as much information as possible, help them out. So let's go into the practical insights. And again, we'll help you a little bit more on the details. There's other videos that we can have you watch for the details, but we want to cover practical insights to increase your success applying for these. Timeline. This is a program that works in months, a month or months, not days. Based on the information that we're hearing from the SBA, your best case scenario is, a day to complete, about 15 business days to process. That's 3 weeks. It could go quicker, and we're hoping that the SBA has more resources so that they can process these things quicker, and 5 business days to close. So that's a total of 1 month. This is, again, why we say, don't wait until you're, a week until you're out of money. If you only have 1 week of runway, you've waited too long. Make sure that you have at least 1 month, but probably longer than that. But let's think about the worst case scenario. You struggle to get all your paperwork together. It takes you a week to complete it. The SBA gets behind because of the huge demand that's going to come into this program. So it takes them 4 weeks to process, but your information is incomplete or incorrect. So they kick it back to you and you have to provide additional information. It takes you another week to fix it. You see the timeline here. You could go to 2+ months, and this is while you're running low on cash. So again, get ahead of this and try to get the right information in there to maximize your chances for success. So a note on the statement of personal finances. This is, it looks like a balance sheet, but this is about personal finances, not business finances. Remember that you're going to personally guarantee this loan. This is for companies that don't have sufficient credit as a business to get private credit. So you're going to personally guarantee this. If your business finances are good, you should be eligible for other credit and you don't qualify. for people without credit, they want to know the likelihood that you will repay. So they're going to look at things like your credit rating, whether you're behind on your taxes, whether you owe on child support, whether you're behind on student loans. They want to know if you personally have collateral that they could take if you don't repay. And remember, you will personally guarantee the loan. And let me make sure that I've got George unmuted so that I can bring him in on George. I'm trying to, gotcha.
I think we're good.
I'll let you jump in as I go if you have any insight on things. We've set aside some time to talk about the statement on personal finances later too.
Right.
Okay. One of the other things is you don't ask for a loan amount on this. You have to show the SBA how much you need. Don't make them guess. Don't underestimate your expenses and get awarded a smaller amount than what you need. Don't tell me, show me. And what I've done here is I've provided the optional part of your statement of personal finances. So the form says you don't have to provide this. It's probably in your best interest to provide it so that the SBA knows the amount that you need. In addition to that, you fill this out. If you feel like those numbers don't sufficiently explain the financial situation of your company, use that space for additional narrative. There are several spots on the website, and let me go back to, we recommend using the website to fill this out rather than the paper application, just because the SBA says it will likely get processed faster. Use the most efficient means that they're providing. So on the website, there are a lot of places to put in a narrative. Make sure to explain as best possible what you need and why you need it. There's also the schedule of liabilities. Make sure to do that right. Make sure to get all of your liabilities included there, because if you leave something out, you're likely to get awarded less than you might have otherwise.
Yeah, one way you can help them out is that, you know, as we've seen on a previous form, they want to see the last 3 years, fiscal years, monthly revenues. So this form is your opportunity to show them how you're being impacted by, you know, by this disaster. And if you've shown good results and then can demonstrate this year you're impacted because customers are canceling orders or deferring orders, this is the way to illustrate that to them financially so they have a sense of why the loan's justified that you're asking for.
Next, get in line, get your share. This is an opportunity and a competition. Some regions will get more money than others. This is a system that as more states declare an economic disaster, there will be more applicants challenging a limited system. So get in line ahead of the crowds, get your paperwork right the first time. You know, try to get what you need, acknowledging that you can draw less than what you're awarded, and you can ask for increased amounts in the future. But last, make sure that you're not taking out more than you can repay. So don't, you know, avoid one financial crisis by creating another. And then from there, think about kind of completeness versus getting it done. Try not to make the SBA fill in the blanks. They likely won't. Give them a complete application that they can quickly approve. You know, these are going to be people who are faced with huge amounts of applications. The easier you can make their job, the better. They're likely just as stressed out as you are going through this situation.
Yeah, you definitely don't want to give them a reason to kick your application out. I've been working on the online application for one of my clients over the last couple of days, and what I like is you can put 0 in a box, which is good because that lets them know you considered it and you put an answer in there that 0 or not applicable if you can put a narrative in. If you don't fill anything in, then the person that's looking at the application is not sure if it applies or not, and they're likely to kick it out and say it's incomplete. The other thing I learned too, yesterday afternoon in particular, the website was excruciatingly slow. I came in about 6:15 this morning to work on the application, and the website was way more responsive and much easier to use. So just keep that in mind as well. I think later in the evening or first thing in the morning is good.
one of the big things here, think about your cash position. You know, when we talk about personally, everybody should try to have a 6-month reserve. Your business, you know, think about the reserve available there. Look into the future, keep your cash position healthy. What we did is kind of think about this in terms of a continuum. You know, looking at this diagram that I've created there, you know, if your finances are great, great. Consider donating to the Hartford Foundation's COVID-19 Response Fund. When you're something less than that, you need to start thinking about how you'll interact with this program and why. If your finances are most likely okay, you're going to consider credit sources. You may be able to get privately sourced credit, but prepare this application just in case. We don't know how severe this crisis is going to be. It may, you know, if you have 6 months of runway, that may get shrunk down to 2, and you don't want to wait until it's 2 before you apply. If you start to see your runway get beneath the cash position that you want, then put the application in. If you're vulnerable, submit the loan to get it in, to try to get as much resources as you can. Remember that if you get, you know, private credit that's going to be at probably a higher interest rate than this, you can move it around once you get this 3.75%. Again, not professional advice. Seek professional advice if you want there, but 3.75% is a very generous rate. If you're in immediate financial issues, get this done. Don't not apply for private credit, but you need this as well. If you're near insolvency, we're going to talk about some of the potential next steps in order to prioritize the right expenses. Really, the goal coming out of this is to make sure that we don't lose any businesses as a result of this crisis. Keep your cash position healthy, extend your runway. And by runway, what I'm talking about is how long your cash can last given the expected expenses. And as you're thinking about the amount of revenue that might come in, be conservative. We've seen companies go from a lot of revenue to very little. So think about, if you didn't have any revenue, how long will your cash last? The last thing, make them say no. Make the SBA say no. You know, acknowledging the value and scarcity of your time. If you need money, even if you have access to credit, apply. If you don't qualify, the SBA will say no. It's a great deal. Let's keep our economy healthy. Let's make sure we don't lose any businesses during this crisis. So from there, I'm going to pass it off to George to kind of go into the nuts and bolts of the requirements for the loan and how you might gather those.
Great. So record keeping is crucial for any business, particularly small businesses. And being able to come up with credible, accurate information is really important, especially in a lending environment. So this is the form that I referred to earlier, where they're going to want to see how you've done on a monthly basis over the last 3 fiscal years, and then some sense of where you're likely to end up in the current year. I find most small businesses, you know, predominantly are on QuickBooks, but any good small business accounting software should easily be able to run an income statement or profit and loss on a monthly basis. And you want to make sure it coordinates with how you file your tax return. So most small businesses file using the cash basis. So you would want to run those reports in your software on the cash basis as well. Most of them, you know, have the option. They'll ask you, do you want a cash basis or an accrual basis report? So it's important to note, to realize which basis you're filing on the tax return, because they will compare these monthly numbers, they'll add them up and make sure it agrees with your tax return. This is the personal financial statement section. I found it pretty user-friendly. I did like the ability to put 0 in when it didn't apply, just so that you're not making them guess whether you have that particular asset or liability. I also found on the real estate piece, some pieces of real estate, you might have a mortgage, some you might not. And in the situation I'm working on, they had both types of real estate where they had a mortgage, but others they did not. And I was able to put not applicable in the line there so that whoever's reviewing the file would know that I didn't forget to put the mortgage on that property, that it did not have one.
So that's the same, that's the paper version of that form, just because
Right.
the last one was pixelated.
Yeah, if you could go back, this one is, just go back to the paper version, just because it's a little easier to see online, and it covers all the different categories. I think a lot of this is self-explanatory, and thankfully, most of us have online access to our bank accounts, so finding out what values you have in your cash accounts should be pretty easy, between being able to go online with your bank, and then also if you're using accounting software, if your books are up to date, that's the balance you'll want to use, because there could be reconciling items between the bank and what you have on your books. And actually, this is a personal financial statement, so if you use a personal finance software like a Quicken, you'll be able to pull this information in, as well as your online banking. Same thing if you have IRAs or rollover IRAs, retirement accounts. Hopefully you have online access to those accounts as well. Accounts and notes receivable, those are typically business items, but individuals do make loans to friends and family. They might sell a piece of real estate and take back a note. So you would want to include, if people do owe you money and you're sure you're going to get paid on those, you would need to list those as assets, and then they give you an area to describe what those receivables or notes receivable are all about. Life insurance, some people have whole life policies where they put a lot of premiums in over the years, and you do build up some cash surrender value. I don't see a lot of that, especially in smaller businesses, because that tends to be more expensive coverage. I typically see term life insurance where you don't get that cash surrender value build up. So that's most likely not applicable for you, but you would want to put a 0 in there if you don't have it, or if you do have access to the surrender value of your policy, you would put that in there. Stocks and bonds, same type of thing. If most people hold them in brokerage accounts, so you should be able to just go online and find out what your values are. And one thing, at the outset, pick a consistent period. So if you're doing this as of, February 29th or January 31st, just make sure the values you're using are consistent all the way through on those dates. Again, real estate, your personal residence, if you have a second home or an investment property, you would want to list that there. A few years ago, it was kind of hard to figure out what a piece of real estate might be worth. You would have to talk to a real estate agent or a commercial business real estate broker. But now with Zillow, a lot of online tools, you can get a pretty good estimate of what your real estate's worth. Same thing with automobiles between Edmunds and Kelly's Blue Book. You'd want to be conservative there. But and I know on those services you can, get retail, private party, and trade-in value. So you'd probably want to go with a private party value there. And then some people have a lot of other, the dreaded other personal property or other assets, but that could be, your personal effects around your house. If you have extensive furniture or antiques or collectibles, that type of thing, you would put in there. You may own some, it's mainly what I see. It's antiques, furnitures. You might have boats. Some people, have toys that they like to list there. Quite frankly, really from automobiles, and other personal property, other assets, lenders are going to put less emphasis on those because those are harder to sell. And then if they are going to get sold, it's usually a quick sale. So even if they might be worth $1,000, a bank or a lender might be willing to take 500 just to get rid of it, and rather than hold on to it for an extended period of time. You know, in terms of so those are kind of the asset piece, or what you own. Those are the things that have value to you. If you can, you know, monetize them, or they have some ability to be monetized. On the right-hand side here, we're looking at liabilities, or what you owe to others. So on the accounts payable side would be if, you know, mainly I would say credit cards, or just, you know, household bills that you have to pay on an ongoing basis. Usually those people pay those on a monthly basis so they don't pile up too high. And then on the notes payable, that could be, you know, there's unsecured loans that banks will make to people at some point. That could be your credit cards, could be a home equity line that you use against your house that's outside of your mortgage. I think most people are familiar with, you know, auto loans. You purchase an auto, you put a down payment down or make a trade-in, you've got a monthly payment. Again, you can get those values online relatively easy. And then other installment loans just might be for, could be furniture, appliances, that type of thing, where you may taking out an installment loan over a period of time. They're going to want to know that, you know, what you owe to retailers or other vendors. So if you have a life insurance policy that does have cash value, let's say you've built up $50,000 in cash, the insurance companies will lend you money on that cash value. They're not going to give you the $50,000 that maybe you've built up, but they might lend you 20 or 25. So it would be important to show that that you do have a loan against that life insurance if you do list it as an asset on the right or on the left-hand side under the cash surrender value of the life insurance. You know, mortgages on real estate, again, pretty easy to find online for most people. So that could, you know, be on your home. You know, if you have a vacation home or a rental property with mortgage on the real estate, you would need to list that there to match up against the asset that you've declared on the left-hand side. Unpaid taxes, that would be your federal and state income taxes on the money that you earn. Could also be real estate taxes or personal property taxes on your house or your automobiles. You know, with the disaster relief that the IRS has provided, if you do owe on your income taxes, you have until July 15th to pay for them, but you still owe them today. So you would need to list those as a liability. My understanding too, I was on CBIA had a call with the governor yesterday, and he had indicated that the state would follow suit with the IRS in terms of the tax liabilities being due in July, although I have not seen anything official on that, so don't hold me to that. And then you would list any other liabilities you might have to friends or family, whoever you owe money to, where it's maybe not a recorded type loan, whereas a mortgage or a car loan would be kind of recorded and secured against an asset. So on the left-hand side of your assets, you'll see a line that says total assets. So you'll do the math there to find out what your total assets are. Then on the liability side, you'll see a line item that says total liabilities. So you would add together everything above that. And then the line below that is the net worth, your net worth, which would just simply be the total assets minus the total liabilities. And hopefully everyone has more assets than liabilities so that you have a positive net worth. You know, lenders like to see that you do have a positive net worth. And, you know, in addition to your credit score and your ability to pay, they also, especially since you're going to be personally guaranteeing these loans, that there's other assets available to them if need be. If you're unable to pay the loan, that they will come after. So you do have to understand that when you sign a personal guarantee, your personal assets obviously are at risk in a situation like that. I know myself, prior to starting TAG, I was a partner at an accounting firm, and we had a line of credit, and every year my partners and I had to sign personally on that line of credit. So I know what it's like to, have that kind of knowing that's out there. If things don't go well, they could come after your house and your other assets. Then section 1 below, they do want to know what your annual salary is, in terms, if you're a corporation, what you're paying yourself on a W-2. If you're a partnership or an LLC, that would be more, what your draw would be out of the business. I know on the online form, they ask what that is on an annual basis, and what the as of date is. So I think most people just, they've recently gotten their W-2s. So putting the 2019 W-2 and using an as of date of 12/31/19 would be fine. Your net investment income would just be interest and dividend income or capital gains that you might have on any investments that you own. If you have a rental property, or multiple rental properties, they're going to want to know what your net rental income is. So, your gross rents minus all the expenses. So, typically that's going to be the interest on your mortgage on the property if you have one, obviously the property insurance, and then any other costs associated with it that the tenant doesn't bear, whether it's, some of the utilities or the repairs and maintenance and whatnot on it. They'll want to know that. And then, then they'll say other sources of income. You may come from a family that has set up trusts, perhaps, that you get an annual, an annual distribution from. You would need to list that. That's about the only one I can think of. I mean, I guess if you were lucky and you won the lottery and you took the money over time, that would be another source of income for you as well. And then the other thing they want to know is contingent liabilities, and people often forget about contingent liabilities. They might be asked by a family member or a friend, to co-sign on a lease or a car loan. Typically, those are the two I typically see. So if that person cannot pay the lease or pay the loan, then they're going to come to you to make good on that because you signed as a co-maker or a guarantor on the loan. So just don't forget about that, because they are going to be vetting this information. They're going to, especially if you do the online application, you're putting down who your mortgage is with. They want addresses and whatnot. They are going to vet this information out. If you've been subject to some type of a lawsuit or judgment and you owe money on that, you obviously are going to need to list that as something that you're potentially liable for. Your income taxes, we covered that earlier. It's great, we got an extension to pay it, but you still owe it. So that would be a debt that's got to be accounted for. And then other special debt, I'm not quite sure what they're getting at there, but that's kind of, they always put a catch-all on there. So you may have something that you could possibly have to pay on that doesn't meet one of the other categories there. And you would want to put that down there and explain what it is. So this is what the online version of the prior form looks like in terms of putting down the liability. So they're going to want to know the name of whoever lent you the money, if it's mortgage, home equity line of credit, retailer, that type of thing. What did you originally borrow? And then and when did you buy it, or when did you borrow the money? They're going to want to know the current balance. So what do you have left in terms of what you owe? So if you originally borrowed $100,000 and it's down to $75,000, you would put the 75 in there. And then they're going to want to know if you're current on that loan. So if you're behind on payments, you can't check that box. But if you're making all your payments and you're up to date, check the box. You're good to go. And if you're not, don't. They're going to find out that you're behind anyway. So don't check that if you're not current with it. They want to know when the debt is going to be paid off. So if it's a 5-year car loan and you took it out a year ago, you would it'd be 2023 type of thing. And then they want to know what the payment amount is, and then whether that payment is monthly or annual. I believe some of this is covered up by the screen. And yeah, it's pretty easy to add on another one. And it's also easy to delete something. With that little red X, you have to be careful with that. You don't want to accidentally delete something, but it's fairly straightforward on listing what the liabilities are.
All right, so from there, thinking about next steps, this is next steps for you to take with the SBA and to think about kind of your finances going forward. One of the first things, you're not stuck with the initial amount the SBA offers or that you take. You can adjust your disbursements, increase or reduce depending upon circumstances. If you are declined, you can appeal, submit additional information, and try to get back in the program. This reinforces the wisdom: get it started, extend your cash runway, and kind of figure it out as you go. Reduce your uncertainty, amidst this crisis. Thinking about repaying your loans, these are 20 to 30-year terms on the loans that will depend upon, the SBA's determination. There's no penalty for early repayment, and at 3.75%, that's low. That is a very, that's a nice interest rate.
Yeah, that is a great rate, and it would be tempting to maybe pay it off, but you want to think long and hard about that, especially if you want to expand your business. And you need the working capital to do that. So cheap money is good, and it just gives you that breathing room to help you get through this time.
This is a part, especially for those companies that just need to stretch out their cash, hopefully long enough to get, the first disbursement of these loans. Look, the IRS is granting tax deferrals. You will have to pay it eventually, but you can, defer paying it immediately. Go online, request that deferral. Utility shutoffs are now suspended for business accounts. Again, you'll have to pay it eventually, but you can reprioritize payments that you need to make now and put off other payments that might need to be made later. Extend your accounts payable as much as possible, understanding that everybody's in the same boat. If you extend your accounts payable, it might put that other vendor, into a difficult situation. And don't hesitate to ask for loan, mortgage, or rent deferments, forbearances, or restructuring. What we're hearing from a lot of banks is that they are trying to be flexible in this period because they want to make sure that people are able to continue making payments. And this is a piece that we're going to talk more about in future webinars, but take care of your workers. I know that there's a financial crunch. If you can, let's do what we can, because a healthy labor market will be key to our region's success in the future, kind of in the knowledge economy. If you can't pay them, help people file for unemployment. For some workers, I've helped 2 people file their unemployment claims online with the state of Connecticut. It can be confusing for some people. Let's help them get that done. Be flexible with work from home. Be flexible with childcare needs. Find ways to make sure that we can get everybody through this and come back as strong as possible.
Yeah, and a lot of the employers I'm talking to is they want to keep their people. They know how hard it is to find and keep good people, and the labor market is tight. And if they can use these loans to help keep that team intact, they're going to do it. That's a top priority for them, for the ones I've been talking to.
And for this next piece, Matt, I just unmuted you again. Matt's from the Connecticut SBDC. They're one of the leads in helping with these loan applications. Ask for help if you need it. There are experts from the SBDC, from the Women's Business Development Council, from SCORE, and feel free to reach out to us as well. But Matt, let you come in here for a moment.
Yeah, thank you for giving me just a minute to speak. The SBDC, the Women's Business Development Council, SCORE, we're all SBA partners. So we're all free resources that are available and able to help small businesses with this application process. I know for the SBDC, who I can speak to, we help people with loans all the time. That's what we do, is provide that technical assistance. So the 13 advisors that we have working throughout the state are very familiar with that process, have lender relationships. And on the SBA EIDL specifically, we've been getting trained through the SBA for the last several days, have had the opportunity to already do some applications and also ask a lot of more detailed questions to the SBA that our advisors are going to be able to help you navigate through. So we can help you online, over the phone, and there's no cost again to our resources, and we want to be able to help people because right now the numbers we had yesterday was about 20,000 applications have been filed so far, with about only 500 being rejected. And the majority of the ones that were rejected were because they were incomplete. So when you get rejected for being incomplete, or otherwise, you have a window in which you can follow up and apply again. So go to somebody that can provide you with some technical assistance so you can get that information in and hopefully get funded.
Thanks, Matt. And again, that gets back to when, they can quickly reject an application because they can see it's incomplete. That's going to mean you have to go back, gather more information. When you get it completed again, you go back to the end of the line, by my understanding. So from there, we're going to open up for questions. I also see that we have Marima Gutierrez in here from the SBA. Marima, I'm going to unmute you. I know that you're very busy, so we'll see if we have you. So from there, we'll start going through some of the questions that were asked in the chat window. I'm going to scroll up, but Margot, do we still have you with us? I have her muted. One moment, because she will have kept track of our questions. Mute.
Thank you.
Okay. Hi, Margot.
Great. Hi. Yeah, so we had a couple of questions regarding existing debt. The first question is, I already have bank debt, hold on, and the bank has the first position lien on my business, UCC1. Does this affect my ability to qualify for the loan?
So I can jump in a little bit to our questions that we were asking with SBA yesterday. The EIDL is going to take the most subordinate position to all existing loans and debt. So if you have existing debt, that's part of the global picture, and you should still be able to apply.
Right, and one of the big things is whether you're up to date with your payments. They're going to look at whether you're behind on payments for things like other loans, and that'll affect kind of your credit worthiness.
And if you have like a line of credit, maybe that's not fully maxed out, they may expect you to pull that out first and lend you less. So,
gotcha.
The next question, sort of along those lines, a little different. Actually, so do loans require a personal guarantee for owners with more than 20% stock? It's a little different.
Yeah, my understanding is yes.
Okay, cool.
Yes, any owner over 20% is going to be personally guaranteeing.
Okay. The next question is, I'm confused by the nonprofits that are not privately owned and the charitable organizations not being eligible. Can you elaborate?
Let me get, we're going to put some advice onto the website for that. I mean, basically my understanding, and Matt, you may have a little more clarity here, they're just trying to rule out state-owned nonprofits.
State-owned, they also specifically had said to us, no churches or social fraternal organization nonprofits or foundations, but if it's a nonprofit organization like an arts organization, a nursing home, or a nonprofit daycare, those organizations would be eligible to apply.
Gotcha. Hey, Margot, above that, I had somebody send me a private question. How will collateral work for companies that don't have collateral, like software companies? This goes back to, if you don't have sufficient collateral, they're going to cap the loan at $25,000. But again, a software company doesn't have a lot of business collateral. This is looking at personal collateral. So these are personally guaranteed loans. It's going to look at the owner's assets and liabilities rather than the business. George, is that your understanding as well?
Right. Yeah, I know with software it's tough because it's kind of an intangible. If it's a really profitable software, it's kind of an intangible asset, where a future income stream might make the SBA or another lender feel good about getting paid. So,
Gotcha.
but yeah.
All right, Margot.
Yep. So we had a couple of questions where people have multiple business entities and they're wondering if they can file just one application or do they need to do multiple?
You can, the one I'm working on, he owns multiple businesses. You have to disclose them so that they do ask, you know, does the entity itself own another entity, or does one of the more than 20% shareholders own another entity? A lot of times business owners will have the corporation, they'll own it, and then they'll also have real estate that they rent to the corporation that they'll own in a separate LLC for liability reasons. So they want to know that. They will ask, or that question is on there and you have to disclose it.
But my understanding is they'll have to put in a separate application for each. If each is well, I mean, it's going to be personally guaranteed, but if each is experiencing cash flow issues, what do you think, George?
So, you know, the case I'm working on is that the corporation is applying for the relief. I'm not sure it benefits you to apply for multiple entities. I think you have one kind of core, typically it's one core entity, that would be the one you would apply for, but they do want to know if there's other related parties there.
Gotcha. Okay.
Okay, so another question we had is there are several businesses that have been open for 5 months or less, so they don't have 3 years of financial statements. What should they do?
Just put what you have and just explain in the notes that you just started, and just disclose. I know, and just to go back to that previous question too, not only do you have to disclose the other entities, you're going to have to allow them to look at the tax filings for those entities as well. So you're going to have to provide multiple, it's a form 4506T that allows them to see the transcript.
And we've heard that from multiple SBA people, especially for there could be businesses that are pre-revenue. Provide the documentation, provide all of the documentation that you have. And the more that you can justify that it is a business, and that you do have expenses that you need covered, they will take that into consideration.
Yeah, and giving them a forecast of what you expected to do and then how this impacts your ability to do that would help them as well.
Gotcha. All right, next.
Another question is related to what happens if you need to add more information after your application has already been submitted.
I know if they want more information, they're going to reach out to you and you have 7 days to get it back to them. You really want to make sure your application's complete before you hit the send button. I'm not entirely sure what you would have to do if you realize you forgot to disclose something. I know when you're doing the online application, you can go in and out of it multiple times. You most likely would be able to go back in there, add what you need to add, but you're probably going to go to the back of the line in terms of they're going to have to relook at the application.
So one thing I would add, one of the things that I know some businesses are struggling with is we don't really have a finite end date right now to how long we're going to be affected. So what the guidance is that if you need to go, if you're, whether you're rejected and you need to go back or you're approved and the time window ends up being longer than you originally applied for, you're going to have to submit further information. They said that you're going to want to send a written request in stating what that additional impact is going to be. So you'll send that directly to the SBA after you've been approved. Does that make sense?
Yeah. And I'm looking at Amy and Sarah's questions talking about they didn't see a space on the application for what we need and why we need it. There isn't kind of that explicit space. What they're doing, and that's why we showed you kind of the two places where that information might come from. The reason they're asking for the monthly sales and the expenses is so that they can figure that out. So they don't explicitly say that, but if you filled out the application, you would have provided the information that they need in order to make that determination.
On the narrative side, the other guidance that we received was that upload that written narrative to any spot that you can upload a document, because when they come to review it, they're going to see everything that gets uploaded. So if there's something that you can't quite quantify in here, put that written narrative as a document upload to any document portal within it.
Yeah, it's a good idea because some of the spaces you're limited to so many characters where you can put in notes. And if you have a more extensive explanation, that's a good way to handle it.
All right.
Okay, so it looks like there's another question we just received. A company is owned by a holding company registered in Delaware on paper only. The factory in Wallingford, bear with me while I try to scroll down. Shoot, I just lost it. Sorry, hold on just a minute. My screen just jumped on me.
So I'm seeing it. My company is owned by a holding company registered in Delaware on paper only. The factory is in Wallingford and is the only operating company. It has 50 employees. Am I eligible?
How big is that? I guess you would have to know how big the holding company is, but if it qualifies as a small business, you would think they'd be able to apply.
But and this is where we'll reach out to the SBA to get advice from folks like Marima, but because there are residency requirements that you be within a declared. Oh, do we have you, Marima? Nope. That you have to be within a declared state of disaster.
True.
Mitch, we'll get back to you.
Great. And there was another question before Mitch from Amy asking about, she said, it seems like we're speaking to the standard SBA application. What's being done for the COVID disaster relief? Is there a quicker turnaround, some relief on requirements?
So the EIDL it has been in place in the past, but this is specifically what's going to apply for COVID-19. And the SBA is going to try to turn it as quickly as possible. One of the reasons why we recommend getting this in as soon as possible is that there's going to be a flood of applicants. Like Matt said, Matt, how many applicants yesterday?
It was 20,000 so far this week, I think.
And there's a limited number of states who've been declared economic disasters. And
Connecticut, I think, was the third state to be declared. So, I mean, right now we're at the front of the line. There's still states that haven't been declared. So get moving on it.
Yeah. I saw a loan or a question above that says, can the SBA loan be used to consolidate liabilities such as personal asset line and used to purchase an income property? And I think my guess there is going to be that it's not intended for that.
Yeah, I would agree.
It's intended to cover expenses. It's not intended as a loan consolidation. It's not for, not supposed to really improve your credit status. It's supposed to keep you afloat until we get through this situation. So when you put in your information, they're unlikely to take that into consideration when they offer a disbursement amount. So from there, we are at 2 p.m. What we'll do is this has been recorded. We're going to publish it to our website. And so again, please go to preparedhartford.com. you'll be able to find this. You'll be able to find additional resources, and we'll try to get as much information to you as possible, continuing to work with our partners. George, thank you very much. Matt, thank you very much. Appreciate your participation today.